Well, we meet again.
My viewers, simultaneously a group of people who are somehow my most loyal supporters and also my most vitriolic haters. Whatever group you're in, I hope you're having a great day because dingity ding ding ding, once again the overall stock market hit a brand new all-time high. In this video, I'm so excited. We have a lot to chit chat about. I'm going to be breaking down why the market hit a new all-time high today. I'm going to be sharing a little bit of insights into how I updated my portfolio. I locked in a lot of attendees, but I also most importantly want to let you know why I think that the current pump we're in right now, as I'm filming this on August 13th, is actually gonna keep going. So yeah, a little bit of rear view mirror talk, but the most importantly, what's coming down the highway. And also don't forget to stick around to the end because I have a new position I want to share with all of you that I think is gonna pay a lot. And in all reality, I'm a little bit too excited, so I'll say it out loud. Bitcoin, call options, highly leveraged, ripping it to the moon because it looks like bitty old Bitcoin, the granddaddy of all crypto, is about to break out to a new record high, and your boy wants some. But before we get to all that, I should probably apologize. I know I look a little flush right now, and this is just what I look like. I was watching an episode of Cops because the market was boring, so I was already feeling some sort of way, and then I looked over and I saw what Bitcoin was doing, and then I got all flustered, and before you knew it, I looked like Casper the Friendly Ghost, and here I am filming the video. So you're gonna get what you're gonna get, but don't forget to like, subscribe, do all that stuff. It makes my mom happy, and it makes her a little bit less sad that I didn't use my college degree for anything, I suppose. Well, anyway, let's roll the tape. By the time the casino officially kicked us all out today, here was the headline. Dow rises 400 points, S&P 500 hits new record in second day of gains. So yes, the overall S&P 500 getting 0.3%, new all-time high, and also closing at the highest value ever, and pretty much the same situation for the NASDAQ. Slightly green on the day in terms of its close, but notching a new all-time high. I should point out from a technical perspective, it's right at the top of this overall channel. And even though we don't talk about it a lot, I do want to give a little bit of an applause to what's going on in the small cap sector, because in the past 2 days, this thing has ripped 5%. Major technical breakout. Is it at an all-time high? No, but IWM, the Russell 2000, looking pretty darn good. So the really quick summary of why things are so bullish in the recent term is basically because of Fed rate cuts. Stock and bonds climb on September rate cut wagers. Right now, we can actually see this is a big pivot. Even if you watched the live show this morning, 94% chance of a 25 bips rate cut. Okay, we kind of knew that, but now there's a 6% chance of a 50 bips rate cut. Early this morning, there was a 6% chance of no rate cut whatsoever, which is telling us that in the September meeting, we're definitely getting a rate cut. And now the argument is between what size. I should also let you know by the end of this year, there's even a 3% chance of an entire 100 bips and about a 53% chance of 75 bips. So this is a big deal because as rates come down, money becomes cheaper. It becomes cheaper to take capital out on loan, which helps businesses grow. Obviously, the stock market is a forward-looking mechanism, and it's pretty stoked that capital is seemingly about to be cheap. So that's the larger picture. Yes, we're looking pretty good, but if you're a day trader, scalp trader, there's a good chance you were ripping out your hair because this is how it was. We pushed to the new high right at market open, and then we just puked, and we spent all afternoon there, and actually the market picked up right at the end. The NASDAQ really didn't. Obviously, the Russell's been crushing it all day, but tech sector pretty much stopped moving at like 10:30, 10:45, and I really want to explain why this happened. This is more of a self-fulfilling prophecy phenomena. What you need to know is when we opened up, there was a downside gap fill. Our opening value was above the high value of yesterday. There was a literal gap in the chart right here. This is not a guaranteed play. There's no such thing as a guaranteed play in the market. But when you see that type of a thing, there's a very high odds chance that you end up filling the gap. So look at this. We traded all the way down to the high value from yesterday, filling the gap in the daily chart. And then we kind of hung out there. We touched it a couple times, just kissing our cousin from Alabama or something. And then we popped it right back up. So that's one thing from a technical perspective. You know, gap fills are high odds plays. But another reason we knew this was a very high odds play today was because of what was happening in the options market. I rewound all the way to 9:30 a.m. and you could see there was a massive negative gamma node. Well, that tends to serve as a lot of resistance because that means someone's probably going to want to take profits there. And if you fast forward a little bit, we hit it. Great. We just got past that huge, like this is a 99th percentile type of a gamma node. We hit it. And then guess what? We dumped right after. We fell all the way off to that downside gap fill, guess what? We ended up getting more gamma support right there. And then as that gamma started to die off, we finally got a little bit of a relief. So between basic technicals and also understanding the option structure, this was actually a really easy type of a play. Now, the tool I'm using here is called Spot Gamma. If you want to try it out, it is by far my favorite option to analytics tool. I've used them all 4 years, and I'm telling you, this is second to none, and you can get yourself a fat 80% off discount. It's in the description of the video, just if anyone wants to know, and I'm going to be using it a little bit more. So with that, when I saw this pump this morning and I saw the setup, I decided to, hey man, probably time to lock in some of your gains. You guys watching this little mini series we have going, know at the start of last week, I blew out $30,000 to the point that I was nervous and I didn't tell my wife, and some sleepless nights. It sucks to lose that much money. And as many of you, I guess some of my supporters, but also some of my haters
Said, nope, that's done. He's going to blow out his account. He's not going to make his money back.
well, it looks like your boy's gonna get the last laugh, because if I show you this right here, I got into this. This is my actual account. August the 6th, I got into 638 SPY calls for August the 22nd. That's the expiration. I was in at 482 and it cost me about $20,000. Well, I scaled out both on the 12th and today, the 13th, half and half. So the half today actually paid for the position, which means I cleared $17,000 in net profit. $17,000 net profit, which is just over half of what I lost. But hang on, the party didn't stop there, because your boy double dipped in a highly levered TQQ play, where you could see what I did. I basically ended up getting in here, cost me $20,000, paid for that today roughly, and that means I was net about 24. So I made 24,000 on one play, 17,000 on the other play, just over $40,000, technically 41,000 on just those two plays alone, and I only lost 30. So net ahead. But also, if you're watching the stream this morning, you know I closed out a couple other ones not as special as this. I closed out Robinhood for about 4K, and I have a lot of swingers, and like I said, I made a brand new position that I'm excited about. With that being said, if you're in the Discord, you know that I made new overall market positions. I didn't close these out because I think that the market is going to be all of a sudden just diving. No, I saw this setup this morning, so I locked in optimal profits, waited for things to calm down this afternoon, and got into new positions. And like I said, you could join the Discord if you want to see it. But most importantly, I want to explain why I think the market's going to keep going. And honestly, it's not that big brain of an argument. So there's a couple things we have to review. We have to review what overall price structure, momentum, option structure, and what the big guys are doing. So first of all, price structure. We have higher highs, higher lows. By definition, that is bullish. You see that in the S&P 500, the NASDAQ, and the Russell. We have higher highs and higher lows. That is a bullish price structure. Same thing, S&P 500, NASDAQ, and also the Russell are all on top of the major EMAs on the 30-minute, 4-hour, and on the daily. This is the EMA cloud, so that is bullish momentum. That is awesome. The other thing we need to look into is straight up option structure. The yellow are calls, the blue are puts. More calls than puts today, more calls than puts tomorrow, and almost, well, actually more than double the amount of calls than puts on Friday. So the option structure is clearly bullish. So from there, I also want to look at the flow. Well, S&P 500, we ripped, we hit that negative gamma, we created base, and then we exploded into close. I like that. NASDAQ, same thing. We ripped at first, then took a breather and pushed into close. And then also the Mag 7, for at least this Friday, similar situation where we push into close. So this one could look a little bit better, but overall a little bit more bullish than it is bearish. And last but not least, I want to show you what the big guys did. Even though the market wasn't that exciting, guess what? The big players bought all freaking day. So when I look at everything that we have, everything across the board of price structure, price momentum, option structure, really just what's coming down the chain for options flow, and the big guys, it's either neutral, but most of them are bullish. So a lot of them are straight up bullish. A couple of them you could say, it's neutral, leaning bullish. But no matter what you say, when I look at the actual quantifiable evidence, the actual empirical evidence, it is all favoring the bulls. And remember, this is part of the important narrative that this is happening. Maybe this is right, maybe it's wrong. I would say it is actually accurate to say this is because of the impending rate cuts. But this might get even better tomorrow, because Thursday, August the 14th, we're getting the PPI report. Remember, all the party started when we got the CPI report, with inflation coming in lower than expected. Well, tomorrow, the exact same thing might happen at 8:30 in the morning. So an hour before the market opens, and arguably we might even get better data on Friday with the retail sales. So please, before market open for the remainder of the week, be paying attention. So even though I don't want to beat a dead horse, because that actually sounds pretty mean, obviously I'm bullish. I'm putting my money where my mouth is. I locked in $40,000+ and I just keep rolling it more and more and more because the opportunity is there. But so far, we've been talking a lot about equities, and I think the best opportunity is in an entirely different market. Have you guys ever heard of Bitcoin? It's the internet's digital money. Whether you like it or you don't, it's about to hit a new all-time high. How crazy would it be if it just right now, as I'm filming live, it just pops? So obviously, bullish price structure after breakout, bullish momentum. To check the options market, the closest thing we could probably look at is IBIT. This is the largest ETF. Look at that positive flow into close. And also in terms of where we're at, well, we closed right around 70. This is a bullish position. This is negative gamma. If we could get over that, we might be talking 72, 74. That's the low vol point. I mean, that's about 0.5%. I know 0.5% doesn't sound like that much, but when you're playing a leverage ETF, as I'm about to show you, that could be a decent amount. And also a 0.5% in Bitcoin, well, we're talking about $6,000. Like, we might be at 130K by the time this actually happens. So even though it sounds small, think about what that actually means. I should also point out that yes, I'm putting my money where my mouth is. Currently up $35,000 on my BITX calls. These are not new calls. I've been in them for a second. I got in on August 7th, but the fact that they're in the money and basically I have one on this play, I'm going to ride it. Yeah, I have to battle theta decay, but I was looking for an opportunity to roll up and out. Really didn't have it, so I ended up just kind of adding on. And here's my brand new position, BITX, additional calls farther out, higher up the change, and those are already up 37%. So that's up 6K. That's up 36. So that's another 40K right there. I locked in 40K. I have some other runners. Bro, this is looking to be a sick, nasty week. And I don't know how this is going to happen. Obviously, I'm not clairvoyant. I can't tell you what's going to happen tomorrow. But in terms of odds, in terms of high probability pathways, when I put this puzzle together, it's looking pretty freaking bullish. Obviously, these are my own thoughts and opinions, and I would love to hear from you in a comment below. Do you think I'm doing the right thing and just doubling, tripling, quadrupling down? Or do you think I'm just getting lucky as all heck and just my day of reckoning is coming? Let me know in a comment below. I appreciate all the good vibes. I appreciate you stopping by. I'll catch you in the next one.